Welcome, traders. Today is Tuesday, May 18th, and I wanted to go over something that I noticed on the charts today concerning the KP2 ratio. Now, if you are new to ZoneTrader Pro, what ZoneTrader Pro does is something completely different than other software. What we are able to do is we are able to analyze the amount of support and resistance through limit orders. And those are limit orders that are filled. So what I wanted to illustrate here is that we had 3 ZoneTrader Pro distribution divergence sell signals, and the last sell signal ended up being a fairly substantial 36-point move. So I wanted to illustrate something here. What was interesting about this entire day was that you saw every support level being bought. So what we have here, here, and here are special divergence where they were buying them. They were buying the spiders as price was falling. But what we saw when we got up here to resistance at around 416, what was happening is that there was a significant amount of limit order resistance. First, we saw a 41.74, a 43.57, and then a 34.99 going into that very large close there. And what is important to understand is these distribution signals are based on all of the trading that occurs from this high to this low, back to this high right here. And the ratio that we're getting right here is based on limit order resistance from the low to the high. And what we want to see, especially if we're going to be taking a trade, is we want to see a higher number. And I've explained this in several other videos, but what was very interesting is the way the ratios actually printed today, which is what I want to illustrate here. So on the bottom, I have the KP2 ratio indicator, and what is just really interesting is just how steep the incline is going into these trades right here. Now, what is also interesting and very, very informative is you can see back here, prices already started to sell off. But what is happening is the ratio is still increasing. And you can see that we got our real-time sell signals here very close to apexes in each of the trades here. But what I really thought was important is to illustrate is in this second trade and this third trade here. What we're looking at is a significant divergence as price falls, but the ratio is increasing. And you see that occurring in the second trade here, and you see it occurring in the third trade here. And that is extremely important because what they are doing is they are coming in with limit orders and market orders, but they're suppressing price with the limit orders, and it's only increasing as price is falling. And that's why we see these large moves here. The important rule to remember is if the ratio is increasing with the price, that is what is expected, and that would lead to a better trade. And if it is not responding with price, in this case, it's responding, showing you even more resistance, that is going to be good for your short trade. We can see the same thing happening on the 300 tick chart of the ES right here, where this was just a huge increase in the ratio as we got up to this high here, and then we immediately began that large sell-off. But at the beginning of the day, what we wanted to be concerned about is we would not wanted to have gone short, at least in this area, because the ratio was dropping, meaning sellers were stepping away as price was going higher. But what happened? We traded into an exhaustion trading pattern right there, and then that trade was good for over 11 points. So by reading the chart, and you could see that as we got to our high right there, again, the ratio took a sharp turn higher. By reading these ratios, we knew not to get involved in any trade that was here, but we could have shorted the apex from up here. Now, during this sell-off, this is the last thing you would have wanted to see if you were long. You don't want to see the market falling the way it is right here and the ratio going sideways. What that's basically telling you is that there are no buyers willing to step in, and that can really set us up for a strong trend trade right there. Again, this would be the third move down, and this is identical to what happened in the morning, where on the first move up, the ratio was declining as price was increasing. And you could see that the real-time VIX signal is telling you the same thing. And I would also look at this one right here pretty much the same way. It didn't really increase significantly. And on our final try right here, where we had our exhaustion pattern, either here with our exhaustion pattern or here with that test of the high, we could have gone short with our trades. And again, as we go into the close, we can again see that pattern where the KP2 ratio indicator itself was just basically going sideways as we were selling off a good 15, 20 points. And that is exactly what we'd want to see if we were short and we were staying with the trade. I wanted to keep this short and to reinforce how important it is to be able to read this KP2 indicator. If you should have any questions, please let me know. Give me a call. Stay safe. Have a good day.